Okay, so let's kick off with risk. A lot of builders, maybe you're starting out or trying to grow, you might think about building on spec.
Hmm.
Building a house without having a buyer already lined up.
Okay, yeah, let's unpack spec homes for a second. I mean, it sounds potentially quick, right? Build it, sell it fast. But like our sources point out, it carries some pretty significant financial risks for you. You're footing the bill for construction, plus all those carrying costs, loan, interest, taxes, insurance, all while hoping you find a buyer quickly and at the price you need.
Precisely. And if the market dips or buyer tastes change, or maybe the build just takes longer than expected, you could end up with houses just sitting there, empty, tying up your capital, hitting your bottom line. Now, contrast that with, say, a pre-sold home where your client is using an OTC loan.
Right, here's where it gets really beneficial for the builder. With that OTC loan on a pre-sold project, you've got a buyer who's committed. And crucially, their financing is locked in from the start. The sources we looked at state it pretty clearly. OTC loan benefits for builders directly reduce these speculative pressures. You're not building on spec, on a maybe. You're building for a buyer who's already financed.
Exactly. The client's gone through underwriting, they're approved for the permanent mortgage before you pour the foundation. It's just a fundamental difference. It takes a huge weight off compared to the maybe not a spec building.
Yeah, that makes perfect sense. And it leads right into the next point, that streamlined process and, well, the security of having the funding locked down. Think about that worry builders sometimes have, especially with pre-sold homes. Will the client's financing actually come through at the end? What if rates jump 6 months into the build? Does that mess up their final qualification with a traditional too-close loan?